Alright, what's up you guys? This is Janos with Trading Spice. Today is Friday, June 2nd, and we just had another perfect day. I think we broke out of our channel. We have the confirmation for the uptrend. So I think from this point on, as it the past 2 days, and exactly what I told you guys before, once we're gonna establish a direction on a daily time frame, all the follow-throughs of the breakouts is gonna be much more respected and much more predictable. So, and exactly that's what happened today. Today we traded 8 times, 8 winner, and this is how important is the direction and trade with the trends. Every pullback, basically in the past 2 days, we can enter confidently. The follow-through will happen. So let me break down the trades. Let's get in and explain to you guys how all this thing works, right? And if you guys like the content of the video, please hit the like button, subscribe, and turn your notification on. Alright, so let's start our recap here. As I said, finally we have the direction on the daily time frame. So this is really helping all the breakouts, all the follow-throughs of the pullbacks. So exactly that's what happened today. My first trade today, I entered 937 as we pulled back on the very first candle, 37, the very first red candle. That was my entry, as pulled back, and right away it's got bought up. So at the moment I saw that happening, I pushed the buy button. I get filled. I had to hold it for a few minutes because we started to chop around a little bit. And basically my entry was in 42. That was 37, and my entry as we reach my next level, 42. The moment we reach the level, I exited out. Interestingly, we had this huge move. I entered in the 426 calls, but for whatever reason, right, we have about a half a point move, but this move from 110 only went the best exit to 124. So basically it's give me only a 14 cents profit, which is a little bit more than 10%, but still the move to me, it looked much bigger, right? But we have to take whatever the market gives, right? We're not the one who's setting the prices, so as it reach a level, we just have to take whatever the market gives, and exactly that's what happened. At that point, I don't even know how far the price moved on the contracts, because I am focusing on the underlying, not the contract. Reach my level, I exited. So either way, it was a perfect trade, well executed trade. The next one, this was a little mishaps over here. I entered at the second time at 51, the soon as reached bounce back from VWAP. And I know this is a red candle, but the first, as we pulled back, right away we got bought up. Over here, the moment we touched, again, I entered. Unfortunately, this one didn't have the follow through. But as it started to move back, actually, I think was 53. So as it touched, right away I entered, and unfortunately for this didn't have the follow through. So as the second candle printed red, I exited, and in this case almost break even. It's a 2 cents. 2 cents on the 10 contract, not much, $20 profit, but it is what it is. Again, we trade whatever the chart give us. From this point, we had a huge rejection, and then we had the pre-market pivot, right? We can say this as a pivot. This level over here at this point, a rejection, right? We rejected this level. Right before the open, we pulled above and we had it as support. So basically my first thinking is we have our level, right? This, it's again a support level. We went before right away as we shoot under, we on heavy volume, we bought back everything, and my thinking as the first candle make a new high, we enter, right? And exactly that's what I did. I entered 10:02, and this was a perfect trade. 10:02, 44 cents, and exited basically 10:12, all as we moved 10:12, everything I entered, actually not everything because I was holding 16 and 18. So most of my exit was on 10:12. Let's see which one is 12. 10:12 as we was breaking out from our previous little level here. I exited a lot. Exited 2, 4, 6, 8, 10, 12. I exited 14 contracts. 14 contracts from this move up, and then I exited 2 contracts as we was pulling back, and I exited the remaining 4 on the 18 candle 18 as we broke below our level. So this was a very nice trade overall. Some of the contracts reached almost 100%. I entered 44. Best exit was 85, so that's almost 100%, right? On 20 contract, that's very nice. And the last 2, basically, it's still 61, close to 50%. So this was a picture perfect trade. Or next trade, 27, 1027, as we came up of the big candle, and at this point right here, right, we already have a trend line from high, another pivot high, we pulled back. So this candle, it was much bigger than I would like, but we broke out our level. It was an instant, and as this candle, the next candle make a new high, we entered. What's our target? The target is the trend line, and basically exactly that's what happened. 1 minute trade, entered 27.42, exited 28.16. Perfect trade. And this move over here gave about 10%, 113 to 124. Nice trade. And from this point on, we broke out of, basically we can say this as our flag formation, right? Because if we look at, compare to yesterday, right, we gap up, we went higher, we formed our little flag, and then basically from here we breaking out. So my next entry, 1032, 1032, as we were pulling back, we found our support. 1032, we find our support, and the exit from here, 1036. Let me just zoom in for a little bit. 1032, and basically as we reached our pivot high, I know I left a lot of money on the table with this trade, but I just I won't say I panicked, but usually I'm exiting when we're reaching our pivot levels, what is a possible rejection point, and exactly that's what I did. It was a very short distance, so this one basically it's only give us a very little profit. It was about 5%, so nothing major on this one. Our next trade, 1041. 1041. These basically, the way it unfolded on the actual time when the candles was forming, as you see, we have our breakout, right? We have our breakout from the previous higher. We have the breakout from the previous lower high, which is our new pivot level on a high volume. Right away, we dropped and we got bought up. Next candle dropped less than that. Right away, we got bought up. So what is this suggesting to us, right? The bears tried to push it down, but the bulls right away buying up, right? And we do that right at the high of day. So my thinking was we have a very strong momentum to the upside. So as soon as the candle make a new high, actually this one is this candle. Is this candle, the little green candle. As it made the new high, I entered, and my exit 46 47 46 47 46, as we broke our high and the new candle. Basically, these are always as we go, as a possible rejection level. That's where I entered, right? Exactly same thing as I did over here. This was our possible rejection level. We went higher, I exited. Same thing over here. The high of day is a possible rejection level. I exited. Always I leave some runner. I left a couple runner. As we went to the new candle, I exited those. And this one, basically, it was another very nice trade. Entered 91, exited 123, 124. Beautiful. So these give us more than 30%. Picture perfect trade. Picture perfect trade. And as we go along the way, of course, some I exit, but these two was the major exits by contract numbers, and on the high we exited all. Next one, 118. I'm sorry. The next one is 1118. I'm sorry. 11.18. So basically I set out all this nice momentum over here, and the next one 11.18, as we had our little consolidation at the high, this started to get very choppy. So basically what happened over here, again, as the candle made a new high, I entered right away, it got rejected, but never broke neither of the pivot level. So basically stayed in the very, very tight range. I stayed in the trade, but the moment it moved higher, 22, 23, we just couldn't go anywhere. 22, 20, this is the 22 candle, 23, as we reached again 22. This is the 22 candle. Basically, as we broke out of it, right away we got rejected. So I exit partial here and a partial as we broke our candle. We still managed to get a little bit of profit on it. It was about 10%, 51 to 55. Let's say about 8% move. Base hits, base hits, base hits. That's how we can grow the account, right? Base hits. We cannot hope for every move to be 100%, right? That's what we would like to get, but we have to be realistic. Once in a while, it does happen, as we can see on our previous trade. It did happen because the circumstances was right? We had a huge pullback and basically we didn't do any magic. We just went right to our next pivot level. We had a little pullback, we held it through, and then from there it went up. So we hold it. Right here, again, we are at the high of day. So that's the big difference, right? Over here we had a deep pullback, and this is the high of day, where is most likely the rejections will happen. And I just don't want to risk it to be on the move what happened afterwards on this side, right? Because this move, it's breaking all pivot levels where we should exit, and then already we countered a losing trade, which is okay with the losing trade, but we need to and try to prevent, right? You never go broke to exit while you green if you have proper stop losses, proper money management on the back end, right? Because I'm hearing this from a lot of other YouTubers, you know, you should hold who knows till how long, right? And making fun out of the saying, you know, you cannot go broke to take profit. And that's completely true in my point of view. It's true what they're saying in the case if the trader doesn't have any money management in place, right? Because that is correct. You're taking very little profits and a big loss, erasing all of them. But if you have an 80-90% plan and you build your plan little by little, and once in a while the trade move against you, and then you have the proper money management, then that move is not gonna erase any of your small gains. And in this case, 10-15%, those are not small gains. And yeah, that's just my take on this saying. So our next trade and our last trade, and this has happened 12:05. Let's see, where is that candle? 12:05. 12:05. This again, the deeper pullback, And again, we still very close to the high of the day, right? So we anticipating a breakout. We had our pullback, we retested the top, and then we have another slight pullback. And in this case, it was my thinking, we still holding the trend line, right? We did hold the trend line. And the first candle make a new high, I entered 1205, and right away we shoot up. I get a very, very good feel right about the breaking point, but the moment we got flushed down, we broke our trend line, but I didn't get panicked because this is our stop loss, right? The next pivot low, right? So we never reached that, and I stayed in the trade. And importantly, which is again the difference in my point of view between the averaging down and scaling in. And in this case, exactly the scaling in part happened. We never reached our break level, yet we started to curl again. So basically what I did, I entered into my trade at 12.16, which actually is the green trade, the green candle. It was my anticipation, and again, as the candles was forming, at that point it was suggesting this is gonna be the way to go. It wasn't. We put in another red candle, and ultimately that was the end of the pullback. So from there we started to curl, and I was exiting at 12.31. Let's see which one is 31. Again, the high, in this case we already can establish not all the way to the high, but we have one pivot level in the 50s area, right? So exactly that's what I did. Once we break the 50 candle, I exited. So basically I exited on the red candle while was still green, as it printed the new candle, make it high above our previous pivot level. That was my exit, and in this case, perfect exit. Yes, afterwards it was shooting higher, but again, we don't know what will happen next, so we always have to take whatever the market gives, whatever the chart gives. And basically I exited at once all my position in this candle, and basically that one entered at 7. The first batch I entered 86. The second batch I entered 74. So that's basically give us the average around the 80s, right? It's hard to calculate, not an even contract number, so somewhere in the middle. So around the 80s, low 80s, 80, 81. And then from there, this move, I exited at 98. So that's give us a little bit over 20%. So if we count from 80, 98, that's more than 20%, the 20 few percent. Picture perfect trade, right? And we did no magic here. Again, we just hold it and exit it as the first possible rejection level. Again, we don't know what will happen. If this big rejection candle will continue and breaking our levels, then we already again in a losing trade. So I exited right as it printed the high of the pivot level, and this was my last trade. Right now, this very candle at the high, that very candle at the high, let me tell you guys how much it was worth. That very candle right? Just to show how far we can go. That very candle on the high, it's around 200%, but I would never hold this through. So it's a good to look at it. And unfortunately, the way I see, a lot of traders look at it, oh, if I would buy it here and sell it there, this is how much money I would make. But it's not really not working like that, because before that it has so many ups, so many downs, so many deep pullbacks. You already losing money, right? So why you wouldn't take, let me bring back the option chart, right? We entered, let me check the times again. We entered at 12:05, and let me zoom in, right? We entered 12:05, right? As we break 86, we entered 12:16, at 74. This is again the green candle, and then we exited at 12:31. This is the red candle at 98. It's 99, but it's 98. So right over here we made about 20%. If you do 10 contracts, you made $200. If you entered with 20 contracts, you made $400, right? And if you hold it a little longer, look what happened. But the point what I try to make, you already made on one particular trade a beautiful percentage on your move. Don't look at the actual dollar amount, because right now if you're trading with the small number of contracts, $10, $20, $50 profit, it has to be enough, right? It has to be enough. You cannot look for other traders, other YouTubers on the same move. They made what they claiming $10,000, right? It's possible if you're trading with a very high number of contracts. It is possible. You can see it if you're trading 100 contracts, right? The 100 contracts give you already on a 20% move $2,000. So it is possible traders trading 4,000-5,000 contracts. So it is possible to do that, but you cannot compare yourself to them. You are you. And just that moves, it has to be enough. Because what if you enter here, right? Hypothetically, you enter at 130, you take 10 contracts, it costs you $1,300, right? The breakout. You already made $100. This wasn't a good trade. I wouldn't enter over here, but for the example what I try to make. You have a drop. You are at the 80s, right? You already lost $500. Why didn't you exit? Why didn't you exit? What are you waiting for? Yeah, this time it recovered. But what if continue down? How far you gonna hold it? These drops, it break even on another good entry, already broke the levels, right? So it's no point. You cannot wait. You have to put your proper stops, and you gotta take profit. And this is how this game works. Base hits, base hits, base hits. And then you build your account little by little. And as you build it little by little, you can take more contracts. And that's how professional trading works. Is not to hold and hope your contract's gonna go to $1 gain on the contract, or you're making 100% on every single trade. No, you're making base hits, you make 10, 15%, but instead 10 contract, when you build your account, you take 20. You build your account, you take 30. You build your account, you take 40. And those 10 cents move on the contract, it's give you, with 10 contract, $100, 20 contract, $200, 30 contract, $300, 40 contract, $400. And it's exactly the same little base hit, but you have a higher number of shares, right? A higher number of contracts. So the same little move will yield you more and more money. And that's how professional trading works, right?